Let's talk about the week that was Nvidia. It all started last Sunday into Monday when the stock dropped from $144 to roughly $120. But based on Nvidia's market cap, that was equivalent to about $600 billion lost. That was a big blow. Now, where is price heading next? Definitely going to open lower in the morning. But before we look at some levels, let's recap. So Nvidia saw a big valuation pullback this past week. The graphic processing unit leader's share fell 15% from its levels at the previous week's market close. Nvidia was hit with sell-offs this week as information surrounding the new R1 AI model from DeepSeek signaled a potential paradigm shift in AI training and inference. Why? In addition to the possibility that new approaches to AI software could mean lower demand for Nvidia GPUs, the company's stock also saw pullbacks in conjunction with geopolitical and macroeconomic pressures. Nvidia's incredible valuation rise has been powered by the central role that advanced GPUs play in training and running high-performance AI applications. Kind of all started back in January 2023 when OpenAI announced ChatGPT. Now, if more efficient AI models are able to deliver high levels of performance with lower processing needs, it could hurt demand for Nvidia hardware. In addition to the immediate business-specific implications of DeepSeek's technology, Nvidia stock also lost ground in conjunction with broader geopolitical dynamics related to AI. The R1 model highlighted the possibility that the U.S. is losing its lead over China in AI and the rising tension between the two countries. Even if R1 winds up having a relatively minimal impact on Nvidia's business, the trajectory of relations between the U.S. and China could have a big impact on the company's valuation over the next 5 years. Adding to this bearish thesis, Nvidia stock was pushed lower by a macroeconomic catalyst on two fronts. First, you had the Federal Reserve say this past week that it could be keeping the benchmark interest rates at its current levels. Also, investors then got another bearish development later in the week when Trump administration announced that it would be rolling out new tariffs on China, Mexico, and Canada. And we finally started seeing those tariffs become real, and we're starting to see retaliation from these other countries. Nvidia continues to have a strong lead in the GPU market, but it looks like the stock could continue to be volatile in the near term. The company is scheduled, however, to release its fourth quarter results on February 26, and the report is poised to be an important performance catalyst for the AI's leaders' valuation and the stock market at large. What we've seen in the last couple of years is as Nvidia goes, the stock market goes. So with that said, let's just quickly go to the weekly chart. And for months, this $130 resistance support band has served as a floor for price until last week. Again, when price gapped down. Yes, it did close off the lows of about 116, but we're going to have another gap in the morning for sure. Going to the daily chart, now price is dealing with this secular bear bull 200-day moving average. Typically anything under that, you're in a secular bear market. Anything above it, you're in a secular bull market. Now this level, this moving average is now going to serve as a resistance near that 122, 123 level. So where can price head next? We could see another $30 drop. This is where the liquidity is at. Let's look at things on the weekly chart. There's rally, basing candles and rally out. Price held once. And I'm anticipating that the buyers will continue to protect this level at $91 if price collapses again this week. Thanks for watching. Subscribe. Please like the video.